Hi, my name is Nur Aina Binti Mohamad Kassan.
Hi, my name is Nurshafiqah binti Fauzi.
Hello, my name is Asyiqin binti Ahmad Bahari.
Hello, my name is Nur Ain binti Khairul Anor.
We are Group 1 from JBA2513E presenting to you our group assignment of Financial Position and Performance Analysis.
In this project, we will conduct an analysis for both financial position and financial performance. The industry that we had chosen to conduct the analysis on is the industrial services and products. The said industry offers goods and services that include those used in the production of final products, and the three chosen companies are publicly listed in Bursa Malaysia. The first company is Hil Industries Berhad. Hil's product can be found in various industries ranging from automotive, consumer electronics, IT related as well as industrial. The second is Evergreen Fiberhot Berhad, which engage in the manufacture of medium density fiberboard, wooden particle board, furniture wood base and resin. The third and last is KKB Engineering Berhad. The core activity consists of steel fabrication, civil construction, hot dip galvanizing, and oil and gas as well as LP gas cylinder and steel pipes and pipe special and steel.
In this video, I will be present about the financial position for Hil Industries Berhad, Evergreen Fiberhot Berhad, and KKB Engineering Berhad. Based on the common size financial statement analysis, we can see the best performance is KKB Engineering Berhad because it has a balanced relationship between asset, equity and liability, followed by Hil Industries Berhad, and the worst is Evergreen Fiberhot Berhad. KKB Engineering Berhad, or in short name is KKB, has the proportion of inventories decreased dramatically from 2019 to 2020 from 6.0011% to 4.5849%. The lower percentage helped KKB to respond to quick market and industry changes such as short product life cycles. Besides, it can save money on carrying, storage and transportation. KKB's trade and other receivables increased dramatically from 2018 to 2020. It might indicate that KKB will get a large sum of money in the future. The higher of deposit, cash and bank balance are to generate interest and raise cash through sales growth. KKB is a company that is showing an increase with a large gap. Furthermore, the percentage retained earnings in KKB is expected to fall sharply due to the fact that the company loses more money in order to earn fresh profits in the future. Finally, we take a look on trade and account payable is increased because KKB may be paid on a short-term basis using an accounts payable method. Next, I will explain for Hil Industries Berhad. This company is in the middle performance because contributes increasing in all the significant items. So, we can say that this company is not balanced between asset and liability. The most important is the Hil Industries Berhad must have a good plan to control their business. The assets and liabilities must have an inflow and outflow process to earn the profits and reduce the debts. The last one is Evergreen Fiberhot Berhad. It is the worst company because there is no stable relationship between assets and liability. The items that we are focusing on this company is increasing in inventories and decrease in deposits, cash and bank balance. At the same time, they also increase in trade and account payable, maybe because of the purchase of inventory by credit. To sum up, this indicates no profit was generated.
We will now discuss the financial performance for Hil Industries Berhad. For revenue, the highest percentage is in the year 2020 at 122.75% and the lowest is in the 2017 at 100.45%. For cost of goods sold, the highest percentage is in the year 2019 at 124.04% and the lowest was in 2017 at 107.37%. For total operating costs, the highest percentage is in the year 2017 at 120.44% and the lowest was in 2018 at 96.90%. For profit before interest and tax, the highest percentage is in the year 2020 at 168.01% and the lowest was in 2017 at 35.79%. And the profit after tax, the highest percentage is in the year 2020 at 185.66% and the lowest was in 2016 at 27.82%. Moving on to Evergreen Fiberhot Berhad. For revenue, the highest percentage is in the year 2018 at 106.45% and the lowest is in 2020 at 72.66%. For cost of goods sold, the highest percentage is in the year 2018 at 121.82% and the lowest was in 2020 at 93.59%. For the total of operating costs, the highest percentage is in the year 2017 at 18.69% and the lowest was in 2018 at 61.41%. For profit before interest and tax, the highest percentage is in the year 2017 at 217.25% and the lowest was in 2019 at 35.48%. For profit after tax, the highest percentage is in the year 2017 at 251.92% and the lowest was in 2019 at 60.47%. Last is KKB Engineering Berhad. For revenue, the highest percentage is in the year 2019 at 198.45%, while the lowest is in 2018 at 86.88%. For cost of goods sold, the highest percentage is in the year 2020 at 159.17% and the lowest was in 2018 at 61.8%. For total of operating costs, the highest percentage was in the year 2019 at 153.40%, while the lowest was in 2018 at 66.56%. For profit before interest and tax, the highest percentage is in the year 2019 at 625.99%, while the lowest was in 2017 at 206.72%. For profit after tax, the highest percentage is in the year 2019 at 355.09% and the lowest was in 2020 at 49.18%. To conclude, for financial position, the company that has the best performance in the recent year is Hil Industries Berhad. This is because as compared to the other company, Hil Industries Berhad showed the most significant changes in their annual items figure. However, the worst performing company is Evergreen Fiberhot Berhad.
There are 5 types of financial ratio. The first one is liquidity ratio, which is used to assess a company's ability to repay short-term loans. It is also a type of financial indicator that is used to assess a debtor's capacity to repay current liabilities without having to raise any additional funds. Next is leverage ratio, which are used to evaluate the corresponding level of debt a firm has accumulated. These ratios compare a company's total debt obligation to its asset or equity. Furthermore, there is also asset management ratio, which are used to determine how efficiently and successfully a company uses its assets to generate revenue. Other than that, there is also profitability ratio, which evaluates a company's ability to profit from sales, operations, balance sheet asset, and also shareholders' equity. It shows how well a business is generating profit and values for its shareholders. Lastly is market ratio, which shows investors how much of total earning, dividends, and equity each shares of stock receive. It translates crucial company's information to a per share basis. I will be presenting to you the financial ratios for Hil Industries, Evergreen Fiberhot, and also KKB Engineering from Industrial Services and Products Industry. Here we can see the chart for current ratio, net working capital, debt ratio and also time interest earned. Overall performance of the companies for current ratio, we can see that there is a decrease in current ratio values for all three companies. In 2020, Hil Industries had the highest value of current ratio compared to others. The higher the ratio is better. Next is for net working capital. The value for Hil and Evergreen is the highest in 2016 but then dropped drastically for the next year. While for KKB, the range fluctuates around 87,000 to 64,000 ringgit Malaysia. Furthermore is the debt ratio. All three companies have a low debt ratio which are below than 20%. It is more attractive to investors if the value is lower as higher ratio indicates a higher financial risk. In 2020, KKB had the highest debt ratio of 17%, while Hil Industry had the lowest debt ratio of only 9%. Other than that, there is also times interest earned, which is a measure of a company's ability to meet its debt obligation based on its income. The Hil Industry had a high time interest earned due to low interest expenses and high earning before interest and tax, while the other companies had an average of 13 times of interest earned. In 2020, Hil had the highest time interest earned with 929 times, while Evergreen and KKB had 6 and 15 times respectively. Here we have inventory turnover, average collection period, return on asset and also net profit margin. Inventory turnover is a good indicator of inventory quality and management. It is also a measure of the effectiveness of a firm in using its inventory to generate sales. Overall, we can see that the Hil Industry had the highest inventory turnover for all 5 years, followed by KKB and Evergreen. Next, average collection period presents the time it took for a firm to obtain payments owed by its customers. A firm with a short average collection period collects money more quickly. In 2016, Hil shows a significant long value compared to others but recover quickly the next year, dropping from 578 days to 84 days only, and continue to maintain a low period for the next 3 years. Same as Hil, Evergreen also show a long period in 2016 with 354 days but then dropped to 85 days in 2017 before had a significant increase back in 2020 with 172 days, while KKB shows a stable average collection period in the range of 107 to 125 days. Moreover, there is a return on asset which measures the efficiency of asset generating income and the firm's capacity to keep costs under control. Overall performance, Hil Industries show a good performance with an increasement over the 5 years from 2.62% in 2016 to 4.54% in 2020. For Evergreen, the company had a high ROA in 2017 with 5.72% before gradually decreasing to 1.77% in 2020, while KKB showed an increase in its ROA value from 2016 to 2019 with a value from 1.62% to 7.94% before drastically dropped to 2.27% in 2020. Lastly is the net profit margin, which measures how much profit are produced at a certain level of sales. Latest in 2020, Hil show a high margin of around 18%, while KKB had a very low margin compared to the others with only around 2%. Evergreen had a constant margin with an average of 10% for the past 5 years.
For the stock highlight in the first graph, it shows Evergreen is the most profitable company compared to Hil Industries Berhad and KKB company. It is because Evergreen has higher amount of earning per share in latest year than before and able to grow its revenue, which will increase the earning and enhance its cost efficiency, and lastly, it will reduce share count. The second graph, it shows the comparison of market price per share for 3 companies in the same industry. It can be concluded that Hil Industries Berhad has highest market price per share compared to the others, which indicate that the investor must prefer to pay in Hil Industries Berhad company compared to others company. The increasing in the market price per share of Hil Industries is due to the condition of economy in 2020 was recovering from COVID-19 pandemic, which will affect the demand and supply of the stock. Evergreen and KKB company has shown an increasing in market value, but much lower than Hil Industries market price per share. In this slide, it shows the 4 types of market ratio, which is price earning ratio, price to cash ratio, market to book value ratio, and dividend yield. It can be concluded that KKB has much higher price per earning ratio compared to Hil Industries and Evergreen company. It indicates that KKB stock is overvalued while the 2 other companies is undervalued. As a result, the investor will have to pay to a higher degree for KKB stock compared to the others. Next, price to cash flow ratio. It showed that KKB had the best price of their stock due to the company has lower price to cash flow ratio in the current year, which indicate a company is generating ample cash flow that is not yet properly considered in the current share price and has more capital intensive. KKB is an undervalue range, while the other company indicate as overvalue range, which the other 2 company does not generating enough cash flow to support the multiple. Furthermore, for the market to book value ratio, KKB has the best market to book value ratio due to the company has highest incline in times. However, the stock of KKB is indicated as undervalued due to the market to book value of the company is less than 1. Same goes to the other company. For investor, all these 3 companies is still a bad investment, and the investor might need to pay more if the company went bankrupt. Lastly, dividend yield. As a result of the Instagram, Hil Industries Berhad has shown that their company is more efficient in paying sufficient share of their profit in the form of dividend compared to the other 2 companies. It is due to the Hil Industries Berhad has higher yielding dividend stock that provide more income with a greater risk. The stock of Hil Industries Berhad also likely to be overvalued due to the dividend yield is beneath his historical norm. Hil Industries does not have a stable financial with a long record of consistent growth.